Okay, good morning, everybody. Welcome to the show. This is Steve Rashis from Chicago. I'll give you a little brief introduction because I haven't done the Tiger's Den in a while. But again, my name is Steve Rashis. I've been a ThinkorSwimmer kind of from the beginning, and I'm calling from Chicago, or joining in to the broadcast from Chicago. And now we're obviously part of TD Ameritrade, so we're all a big happy family there. Okay, good. I'm on. I hope everybody can hear me okay. So good morning. Hope everyone's doing well. Sorry to, I guess I'm filling in on a little bit of a short notice here. So we're gonna go over some content, I think, in terms of just looking at the overall markets. We're gonna get a little bit of an overview of things that are moving, possibly some things to watch. And then I'm also happy to take, and I encourage and look forward to any questions that any of you have out there in terms of any specific positions you might have or questions you have about something that's going on. It's been a market obviously inundated with tons and tons of headline news and a lot of different pushing and pulling from various ways. So let's get started here. We'll go into a little bit of an overview about what's going on in the market today. Actually, I would say relatively flat day. I think the one thing that the markets are kind of looking for today is obviously the Fed meeting this afternoon. This is their last meeting of the year. So it's not surprising to see the markets obviously opened up pretty strong today. The S&P's traded up to about I want to say 1244, 1244.50, somewhere in that range. So they were up about 15 points earlier, and then there was a couple of pieces of news that came out obviously from Europe that I think that the German Chancellor Merkel commentated about the stability fund, I think, in terms of the amount of capital that they were willing to put into that, or just some basic other commentary that threw a little bit of a jitter into the market again. So we sold off a little bit from there, but currently the S&Ps are up 7. A couple other things I'd like to look at today that I think really jumped out. Oil was up over $3.30 at one point near the highs. It's currently just over 100, up about 2.25 today. So I like to tend to look at the products that are kind of moving. So perhaps there was some nervousness or speculation. I know that there's been some tension with Iran and whatnot. So obviously oil spiked up this morning, and currently it's trading a little over $100. Now that's using I'm looking at the oil futures, the /CL F2 is the product I'm looking at for that. So oil's up 223. Other than that, currencies I think are a little bit in play today. Obviously, that's been the case for some time, the euro versus the dollar. So the euro's a little bit weak today. It's trading 131.09, and correspondingly the dollar futures are up about 45 cents. So, you have that same, I would say tug of war kind of going on in the market where, you've got this constant feed of really kind of jittery information coming from Europe. Last week they had the summit meeting, and, I think the market's expectations were pretty high in terms of what they were going to come up with that meeting. So Thursday, I don't know, for those of you that traded the markets last week or the end of last week, Thursday, prior to the summit meeting itself, what's his name, Mario Draghi from the central bank, from the ECB, came out and basically said that they weren't going to be, ramping up any bond purchases for the troubled nations. So I think that set the tone for that meeting to a degree last Thursday. So the markets had a pretty big sell-off Thursday, and then Friday after the summit, they kind of rebounded a little bit. So whether you believed in that move or not, but they kind of rallied into that. And then obviously yesterday we had another jittery day where the S&Ps were down about 25 to 30 points and struggled to have an uptick all day. And then today into the Fed meeting, they kind of opened up strong again, which is kind of normal. I mean, I think the markets are, they're always trying to climb this wall of worry. So they're hoping that, that there's some good commentary or positive things coming from the Fed today, whatever they're going to say to wrap up their year, et cetera. So that's kind of where we sit right now. A couple other things that I normally like to watch are gold. I didn't mention it to this point because it's kind of a flat day in there. It's down 2 points. So again, I use the gold futures, the /GC for those of you that are on ThinkorSwim trading application. But gold futures trading about 1666, relatively flat today. Let's take a look at some other things, I think the one really notable thing that's over the last week is the contraction in the VIX. Currently, the VIX is in $1 today. It's trading a little under 25. So we had a huge contraction in the VIX on Friday after the summit, the European summit meeting. And I think it's noteworthy the action in the VIX over the last couple of days, because Friday we had a 20-point S&P rally, with a contraction of roughly $4 in change in the VIX. And then yesterday when we came in with the markets down as much as they were, the VIX really didn't move. The VIX actually ended up the day down about 50 or 60 cents. So, I think that I think that the marketplace is kind of admitting that we're moving into the last couple of weeks of the year. A lot of these big headline events might start to subside, the European summit, whatever happens over there, ultimately there probably won't be any significant news coming in the next couple of weeks. I think the central bankers there have done the actions that they said they were going to do. They lowered the discount rate. They've tried to add as much liquidity as they can to the system. The summit is over. So anyway, you've got this push and pull in the markets over the last couple of weeks, especially where you've got this gigantic headline risk from Europe to see what's going to happen there. But in contrasting that, you've got relatively stronger economic data coming from the U.S. than I think was originally anticipated. So ultimately, the net result of this is the markets have had some pretty big intraday swings, but at the end of the day, they're still hovering around that 1240 to 1250 range. So all of this pressure from both directions, so to speak, it hasn't really led to a whole lot. And I think that, coming into the end of the year, when you look at the volatility index, at least to me as an option trader, that's a key measure for fear in the marketplace. And when you start to see that contracting, especially down toward the low 20 level, which is the low that it's been for a long time, that kind of steers me to believe that the year's over. I mean, I shouldn't say it that way. The year's not over, but in terms of people really taking action on any of the things that they want to do, I think they've kind of surrendered. Okay, so I hear that we have a call in from Ron in Florida. And Ron, you have a couple questions or a question on covered calls?
Thanks, Steve. I'm using the on-demand to check out the strategy of selling some weekly calls and then covering them with a 45 to 60-day option.
So you're doing really more, you're using, it's almost like a calendar spread strategy where you're using a longer-term option kind of as your stock substitute, and then you're selling weekly calls against it?
Exactly.
What securities are you working in?
Okay, just on this one here, I went back to 929 and sold the October 1 weekly on Compact HPQ.
Okay.
And covered it with a November 11 25 strike price on both of them.
Okay.
And that was for a debit of $1.04. And then I rolled that on 10/6. On 10/6, the price of the stock was $24.32, and so I rolled it out to the October 2 weekly.
Mm-hmm.
For a credit of 39 cents, and then I rolled it out to the just the regular October.
Mm-hmm.
And at that time, the price had gone to $25.23, so it was slightly in the money there.
Okay.
And my question is, if that continues to go further into the money, and you have that, you're covered with the same strike price there. But if they do exercise that call against me in real life, what is the worst thing that could happen there? Theoretically, I think I'm covered with that, further out call, but I'm not sure exactly what would happen.
Well, it's a very good question. So if you would have had that position on in a live account, and as you approach that expiration in the stock, that you're short the 25 strike, and now the stock is up in the, let's just say it's as of today, you're in the 27 neighborhood, 27.40. What physically will happen if you carry the position through expiration of that weekly contract is you'll come in that Monday morning and you'll still be long the 25 strike in November, or the longer-term option that you own. You can apply this to any sequence of months that you have. But so you'll have that long option, okay, in the back month, and you'll actually be short Hewlett-Packard stock. Okay, so there's a couple of things that you need to consider when something like this happens. The first thing that you have to do preemptively is if the stock that you're trading pays a dividend, what you should do is make sure that you avoid that assignment. Okay, because if you get assigned and the stock pays a dividend, you're going to owe that dividend amount. Okay, so that obviously is something you want to avoid. Okay, now Hewlett doesn't pay a dividend. At least I'm pretty sure they don't. Let me check. Well, actually, they do pay a 12-cent dividend, so it's relatively small. But let's assume that Hewlett did not pay a dividend. Okay, so what will happen is you'll come in Monday, you'll be long that back month call, and you'll be short Hewlett stock. Okay, so what you've really done is, from a risk standpoint, is you have a synthetic long put. Okay, because long call, short stock is the same thing as owning the 25 strike put. Okay, so there's two parts to consider. The actual risk of the position is just the extrinsic value of that strike that you have. Okay, so in most cases, now that that's $2 and change in the money, the actual dollar risk of owning that position, being long call, short stock, is very, very low because it's just the time value of the option that you own.
Right.
Does that make sense? So that's the first part. So the actual risk is the first part, which is very minimal in this case. Okay, the next risk that you have is what we would call margin risk. Okay, because now instead of having to put up just the amount of capital that you've spent on your options on a net basis, okay, now you have to put up capital to be short, X amount of shares of Hewlett stock.
Right.
Okay. So the negative to it is if you when that occurs, if you don't have the capital in your account to support that short stock, okay, then you're going to be forced to kind of close the position, or you're going to have to buy back the stock and sell a different weekly option. If you want to continue the strategy, which you can. Okay. Right. So you might be forced, to manage that, prior to when you're really ready to do so, and then if perhaps this is in an IRA account, then you have to close it that day because you can't be short stock in an IRA.
Right. So you close it on Friday.
Well, I think that, generally speaking, okay, just think of the trade in terms of what you're trying to accomplish. So let's just, again, say that you have the 25 strike on, right? You're long and short, calls in the 25 strike. So your best stock price based on your position is 25. So when the stock is over 27, the position you have on is a relatively bearish type of position because you need a $2 drop in the stock for it to really gain some traction. Okay, so that's the first thing. So what I would always suggest to think about is there's no real reason to let the assignment take place.
Right.
Okay, so what you might want to do if you want to continue along the same lines of the strategy is buy back the near month in the money call, and then sell a different strike call for the next weekly. That's a very reasonable thing to do. That's something you should definitely do to avoid a dividend.
All right.
If that's in play there, but from a position standpoint, if your main goal in this is to just sell extrinsic time value in the weekly options against your long, okay, then as that near-term option goes further in the money, you're negating the effects of that, right? Because as that option goes further in the money, it loses its time value. Right. So I think one of the things to consider is, as it's traveling above there, then you can start to think about rolling that in the money short call, to the next week. Maybe you want to do the 26 or the 27 strike, for example.
Right.
And then you can keep the position going there. But the main, you always have to focus on the dividend risk. And you have to focus on, the actual monetary risk of the remaining position after the assignment. So in your case, the remaining risk after an assignment, because it's the 25 strike and that option doesn't have a lot of time premium or any time premium, your risk is very low.
Okay.
Does that make sense?
Yes. Yes.
A little bit, yeah.
Okay. Well, that does it, Dan. I appreciate your help.
No, it's my pleasure. Did that get all the issues that you need?
I think so for now. I'll work on it some more and call you next week.
Okay, great. Sounds good. Best of luck to you.
Thanks.
Okay, so until we get some other callers, now listen, we're coming into the holidays. I know everybody's got a lot of stuff to do, but I need some help here to get through an hour of content. So I would really appreciate questions. If anyone has any issues whatsoever you want to talk over, that's really, that's what I'm here for to help get through. So please don't be bashful. Fire your questions away anytime you want. Okay, so until we get some more callers, we'll continue on path here. One of the other things that I think obviously has been a huge part of the overall fear levels in the market, is the banking sector. All the financials. If you're kind of like a news junkie to a degree, or you like to watch all the different analysts come in and talk about their views about banks, financials, all how this Euro crisis is going to affect things. You hear the full gamut of opinions. So a lot of analysts have been saying when you look at the U.S. banks, that they're very healthy. They're trading far below, in some cases, their book values. They're et cetera. So I think it's a very interesting sector to watch. One of the indices, one of the ETFs that I think you can do that. And if you like to trade the banking sector stocks, but you don't want to pick any individual banks, you can look at the XLF. It's a nice ETF that encompasses several different banks. Okay, but when you really look at where that's been, it's kind of been stuck in the mud. So I think the banking stocks are kind of interesting to look at. Your J.P. Morgans, your Bank of Americas, Wells Fargo, et cetera. Those stocks have been in play because nobody really knows. I think the associated risks, or what the true risks are in terms of their exposure to anything severe happening in Europe. So you've got this sector that's a huge part, of not only the S&P, but the economies around the world in general, the U.S. economy. So they've got a huge part to play in this, and they've been extremely undervalued. I want to say undervalued, but they've been beaten up, okay, in relation to the broad market. So one of the things that I think is an interesting type of way to look at trading the markets and looking at different ways to position yourself is sector by sector. So you can say, looking at the NASDAQ, for example, looking at the S&P 500, looking at emerging markets, looking at the banking sectors, things like that, and watch how those different indices or ETFs perform against one another. And one of the things that I've always thought is an interesting way to position yourself using defined risk type of trades in a very comfortable allocation, especially if you're new to option trading, personally, I'm a contrarian. I'm not saying that that's how you have to be, but it's certainly something to consider. So one of the things that I kind of like, that I find interesting and that I find very comfortable in terms of a trading strategy, is to look at putting on, like, for example, bullish type of positions in a beaten up ETF like XLF, and then kind of contrasting that by perhaps putting on some bearish type of positions in some of the ETFs or the broad-based indices that have been the strongest. Okay, just as something like food for thought, just as something as a possibility in terms of using some defined risk option strategies that might have some sense. Because my mindset is always that things have a tendency to always be a little bit weak or strong in relation to the S&P 500, and I think one nice way to look at the markets in terms of a trading strategy is to put bullish positions on in the beaten up products and balance that by selling the stronger ones. Okay, so just as kind of a food for thought, and I think that it's a really, one of the things, and I've actually done a lot of chats and different educational material on this in terms of trading markets like this. This has been an unprecedented period of volatility, and it gets very frustrating to deal with all of these huge intraday moves and these weekly, 8 or 9% moves up and down, and then look, and at the end of a 2 or 3 week period, we're right back to where we were. Okay, so I think that one of the key things, and the reason I'm mentioning this, is that when you trade in a fashion where you spread different indexes against each other, okay, you are much more, you're more clear in terms of how you're going to manage that position, and you're not necessarily worried about the huge gyrations that we've been going through. Okay, now let's see here. I think we got another caller in here. I'm sorry, I'm doing this off my phone. Yeah, we do have another caller, Craig from I can't read. Palm Harbor,
Florida.
Baltimore. Okay, super. How are you, Craig?
Florida. It was interesting that you spoke about BAC Bank America, because most people don't want to mention it like it's some sort of disease or virus. It does have a book value and so forth, and I just like to get your opinion. Don't you think when we come out of this, whatever this is we're in, which should be in the next month or two, it has to have leadership from financials to do it?
Well, I think I would tend to agree with that. From a philosophical standpoint, I think the overall health of the markets, I think to a degree they have to be driven by the financials because that's really what holds things back. I mean, if you have severe banking issues and problems, and all this, however it's being driven, it makes it very difficult for the market to gain any momentum, which is exactly what we've seen. We've seen lots of sell-offs and rallies in the S&P, but at the end of the day, we haven't gone anywhere. And I think you're right. I'm sorry, go ahead.
I agree, and I don't think people are addressing the fact that there's many people in foreign countries, and this is nothing new. Foreign countries have always had a certain amount of instability in most every country, tend to look at the U.S. as a safe haven to buy their vacation home, to put a few dollars here and there. And the worse it gets over there, the more money we're going to have coming in here. I mean, it's just really basic to me.
Well, that's one way to look at it, and I've certainly, listened and heard a lot of analysts that say that exactly that point, that you've got, the U.S. banks will benefit from all the things that are going on in Europe and in other places, perhaps. I don't personally, my view has always been, if a stock is valued at a certain point, there's a reason. So you can't make an argument that Bank of America is trading, as the example you brought up, that Bank of America is trading for, half of its book value or whatever it is, because if you assume that's true, you're also assuming all of their assets are actually worth what they say they're worth. Okay? So I'm a much stronger believer that the market is right, and that all the analysts have, it's not that they miss that point, it's that they're paid to be bullish. They're paid to paint a positive picture of something, okay? But the bottom line is that there's other things that hold that back, okay?
Well,
and
absolutely.
I think the reason,
what you're saying is correct, but most of the analysts, at least up until last couple of days, have been talking about the bank's possible exposure and your possible exposure. They very seldom mention the fact that there's other than Dick Beauvais, who says buy it hand over fist, but then when asked if he bought it, he says, well, regulations don't let him purchase it. But
well, sure, that's my point, right. Show me somebody that actually puts their own money up, and then I'll believe their opinion in a more serious way, not to discredit him. I know he's a very popular, analyst for some time, and I'm sure fundamentally what he says is true.
How do you feel that the election, maybe you can touch on that a little bit, and I'll hang up the...
I'm happy to talk about it. Your points are extremely valid. I just want to add one more thing about the banking sector, is that what happens in the market that's specific to that sector is that investors across the board, whether they're retail, institutional, whatever it is, when you start to see, I think banks lose credibility to a large degree because they say certain things but they don't paint an accurate picture of their risk. And I think that when you look at the things that have happened in Europe and the fact that over the last 18 months you've had a constant flow of information saying, oh yeah, these banks are solvent, they're fine, they're this, and it just isn't true. Because they're only solvent if they can continue to borrow money, if they can continue to access capital from their central banks, and their assets are truly valued at what they say they are. Okay, so I think what happens is people worry about that with U.S. banks too. So you start to look at a Bank of America stock and say, well, they're trading so much cheaper. People really start to say, well, it's obvious that all the assets that they think are worth X really are worth 50 cents on the dollar. if they had to go sell them.
We've got 30% of the foreclosures still out there, but all that put aside, all the fundamentals put aside, I think if Bank of America hired a good advertising company and look at, and I'm being totally serious, someone who has really cutting edge stuff that's already popular, who knows what they're doing, knows public perception, their stock could double. I mean, they're in the same light as been put in the same categories, attorneys and politicians for some reason. You mention the word to anybody, and they're like, "Oh, Bank of America." They just have a terrible reputation for really nothing. They're not doing anything different than the other banks are, but somehow they got on that blacklist.
Well, I think that they. Those are you're right. And I'm not picking on Bank of America, but obviously they had a much more toxic exposure to the real estate market here, and when you get tainted that way, investors get scared because they remember what happened in '08. When they just don't want to go through that again. It isn't worth it. So I think that a lot of things have to happen to calm the markets in a much more meaningful way. And obviously the banks that don't have as much bad exposure to the U.S. real estate market are going to be faring better. God knows what they have exposure, in terms of Europe, and what those situations are. The only thing I know from my experience is that whatever the real exposure is, it's always a lot worse than what they tell you, and I think that's a big reason why these things are stuck.
Absolutely. You mentioned their exposure to the mortgage problem and so forth, the housing thing, but one thing that people never mention is BAC and Citibank were the prime lenders or I guess gift givers in these lines of credit. I know myself and many people I know would get checks for $10,000, $15,000, $20,000. I don't even know the right word for it. They're not lines of credit. They were just they were credit card checks, based upon your credit.
Right.
In the mail. And
sure.
How many of those were paid back? How many of those checks did people cash? I guess they were called cash advance checks or something, but they were sending those things out like candy. And I'm sure many of those did not get paid. And no one ever mentions that. I mean, a huge amount of money was lost there, I'm sure. But what's happened now is it's been 3 going on 4 years. A lot of people have filed bankruptcy on that. It's washed out. And one reason the Christmas and the holidays were so much spending is because a lot of people have been issued new credit. So we're just going up the same thing again. It's really tragic, really.
Well, I think those lessons are. I mean, we could definitely finish the segment here talking about the banking sector. There's no question. I think that human nature is destined, just from a philosophical point, they tend to repeat the same mistakes, and they tend to be very optimistic in general, and and that kind of drives their behavior. But at the end of the day, when people run out of money, they run out of money, and if they can't get credit, they can't get credit, and ultimately those are really bad things for the economy. And I think that it's still a healing process. We went through a very traumatic, financial, almost collapse in '08, and I don't think it's reasonable to expect that the overall markets can really heal from that in 2 years, even though the stock market acted like it did.
There was a very interesting show on Well TV the other day about the psychology of the whole thing, and they had some psychiatrists on there and so forth talking about what was happening in '08, '09. It was really, I guess, 2007, 2008. It was a frenzy. It showed the people. The numbers of people that were making purchases, retail purchases and so forth, and people were just acting that gang mentality. They were just flowing into everything by unbelievable, buying cars, buying clothes, buying expensive items they really didn't even need because they were given the credit. It was just we have no sort. And people, I'm in the medical field, and people often ask, well, why are some things behind the counter? And some things are OTC. Some things are, you have to have a prescription for them. Well, that's a perfect example. We really can't control ourselves sometimes.
Well, that's true. So think of it if you apply that to, do you think bankers can control themselves either? So
absolutely
it's
not.
part of life. I mean, it's a human condition.
My wife said I started in college as a manager at a McDonald's when I was 20 years old in Orlando, and if I didn't give account, if I was that far, I'm talking about a relationship to John Corzine, there's no way if my books were even slightly off that I could go in and say I didn't know or I can't remember.
Yeah, he knows. I mean, listen, I'm not a jury, but I mean, he knows, okay? I mean, he probably knows to the penny, if I had to guess.
But the fact is we almost can accept that. There's an old saying, if you kill one person, you're a murderer. If you kill 1,000, you're a conqueror. And these people, and Madoff proved it. You know what scares me about this whole system more than anything else is the fact that Madoff is the only person in jail. Out of 6 stories, he was paying $600 and some thousand a month rent. All those people, he's the only one in jail. Yet Martha Stewart, who never even had one parking ticket, did almost 2 years in prison because somebody called her on the phone and said, hey, you think I should sell this? I heard this and that. And she says, yeah, I guess.
It's funny. We were a couple of my old dear friends here on the desk. We're talking about that very thing a week ago. I agree with you. There's something that, like, when people look at justice, there's just a fundamental level of justice that seems right. Okay, and to me, like, when it comes to things like this, intent has a huge part in it. And we all looked at all the information. I mean, and I'm not saying Martha Stewart was innocent, okay, but you can't lump her in the same group that you lump Bernie Madoff. I mean,
how about a $5,000 fine, not a year and a half in federal prison?
Well, that's the point, right? Exactly. So there's clearly, I think one of the things that I've always found interesting that's evolved over time is, I think transparency, generally speaking, is a good thing. Okay, but it also, if you look back at your individual investors like ourselves 10 or 15 years ago, we didn't hear all of these things. These type of headline events that drive the markets and really cause chaos and make you wonder about all these different things, you just didn't hear about those things. So now it's the exact opposite. Everybody hears every little detail about everything that either goes right or goes wrong. So it just stirs up a lot more public opinion about all of the processes.
I was up at a day trading group last weekend, and I brought up, someone was talking about exactly what you're talking about, news and so forth, and I said, well, there was like 15 people here. I said, how many people know what the SEC was doing while Madoff was doing what he was doing? And one kid, he was like 18 years old there, he says, well, the top 10 people were found to have downloaded thousands and thousands of things from pornography. Not one other person in that room. A matter of fact, one older man there Googled it. He said, I thought you were full of nonsense. Here it is right here. One guy had 12,000 downloads of porn, and he was third in command of the SEC. But nobody else knew that.
Well, that would explain it.
Great show. Yeah. We thank you very much.
No, did you have? I don't have any other callers coming in, so I mean, we can. You were. I think I cut you off right as you were about to ask a different question.
No, not really. Other than the fact that this has nothing to do with stocks, but it's just amazing to me again how the media has twisted this. Mitt Romney, if you notice, he mentioned a $10,000 bet with somebody, and they're saying, "Oh, he is so detached from the guy on the street. I mean, he is just in his own world." Well, but yet they very seldom mention the fact that Newt Gingrich has a $500,000 credit line at Tiffany's, or the fact that, as you know, he got that $150,000 bonus for doing a half a page opinion about the Freddie Mac, of the status of Freddie Mac.
Understood. Yeah,
and
listen,
his company got $1.5 million.
No, I understand. There's, I think, what I've always thought was, what I think is healthy is, not validating like the Occupy Wall Street movement, but what it tells you is that people, because they're exposed to all of these different things, and your average American citizen is now part of this process, and they understand what goes on, and they hear all these things that happen. People are just fed up with basic unfairness. I mean, I think if there's a message to take from that, I don't think anyone in this country begrudges people that are successful, the people that make money, that it shouldn't be an attack on people that work hard, are creative, that build good businesses, that are successful.
You have brought up a brilliant and dangerous point.
Well, that's it.
That's brilliant, because the fact that what you've just identified could be systemic, and even though people got a little bit crazy about wanting to be entrepreneurial and so forth in 08, it might kill that spirit now, because, like you're saying, we're building that hatred towards that guy at the end of your block, which you used to be able to find people that wanted to emulate him. Now they're like, oh, he's a devil.
Well, that's right. It's a huge issue, and it's not something that people really think about, to me, it's like people don't ask the right questions, and I hope there are other callers that want to come in. I do want to take more option questions, but I love talking politics too. I think it's fun. What bothers me the most is that people don't ask the right questions. So to me, the issue isn't whether Newt Gingrich got his company got money from counsel for being some sort of counsel or whatever to Fannie and Freddie. The question is why? Like, why would they go to him? I mean, nobody asks the right questions. How in the world could he be the best qualified person? I'm not saying he's not brilliant or he's not smart, but why are they why are they going to him to get that kind of advice? Okay, so when you look at it, there's only one reason that makes sense. There is only one answer, and that answer is they want something politically from him.
Exactly.
Okay, that's the end of the line. And then when people figure that out and they see that, they're like, well, wait a second, this isn't fair. I mean, so it's just, it goes back to that. I mean, and at some point what will happen, and what makes this country as great as it is that people won't stand for that too long. I mean, they're going to at some point say, look, and you've seen the beginning parts of that already, and people are going to say, look, we're going to demand fairness, and we're going to demand change, or we're getting rid of everyone here, and we're going to, there's going to be a more serious, type of, movement to say, look, we're getting rid of these people. What I think is hysterical about the whole thing is that people point so much, emphasis on Gingrich, but yet he's leading in the polls. Okay, so what does that tell you? Yes,
and that's a good point, and very bizarre, because there's no one more inside. I mean, he's in the colon of Washington, D.C. There's no one more inside than he has been and is. Yet
exactly.
He is somehow it makes no sense. I mean, he's everything that everyone says that they hate. Well, so either that poll is not correct, or it's hard to imagine.
Well, I think it's a complicated set of circumstances. But what it really says is that ultimately, the reason that these things happen, I think, is that ultimately people don't care about those things. I mean, maybe a small group of people get really angry with it and what have you, but people care about their lot in life. And if they look at him and they say, you know what, maybe he can drive the U.S., and I'm not saying that he's ahead of Obama or whoever's going to win, but, maybe he's the right guy to put the right policies in place that can change things.
Sure. I mean, everybody's issue-oriented, whether you're on SSI or you're a veteran or you're in a manufacturing field. Someone's going to say one little tidbit, and that's why you will vote for him, because you want to protect your little nest. I would vote for anybody who would get up there tomorrow and say, I am going to tell you what happened to the TARP money. But they would probably be assassinated the next day by somebody, by some agency, because that seems to be the secret to the universe. Where is the TARP money?
Well, look, I don't like to. I'm not a negative. I don't like to look at things, as a. With a cynical view. I really don't, and I think that there's just an overwhelming amount of things that come that stem from having a true a debacle. I mean, you've got a true financial, situation here that needs a lot of very difficult decisions to be made, and there's a lot more fundamental issues that have driven that than people give credit to also. I mean, listen, people in the middle class in this country are struggling. They're really, but it's not because they're criminals in Washington. They're struggling because, all of these businesses can go build factories in Indonesia and Thailand and wherever and build the same quality things for a third of the price. I mean, that's the reason that these things happen. So nobody addresses the fundamental reasons. They address the actual circumstance. So we have to help these people by cutting their payroll taxes, or we have to help these people by, extending unemployment benefits and all these things. But none of the things that they do actually help. Which is why you continue to have this, circle, of, searching for the right answers. So that's the problem. So the people that should address that are hopefully the people, in Washington can figure out some way to do that. But it's hard for them because, that requires tough choices.
Well, just
right?
as disjointed as our conversation here are the subjects. If somebody will get on one subject, I think, and focus, and that's my problem with my trading, my wife says, and my numbers tell me, if they could just get on one subject, for instance, one guy say, Romney say, whatever's going to happen, I am going to secure the border in 24 months. There will be nobody crossing that border. Do one thing 100%.
Well,
it could be done.
That's a thought. Yeah, it can be done. Yeah, no, I don't. I think a lot of things can be done. It's just a question of it takes an enormous amount of political will to do that, and I don't think anybody is capable of making that sacrifice right now because they're all concerned about getting elected. And
Tom
that's
was
going to drive their behavior.
Marines. I was in the Army. Were you in the service at all?
I was not. No.
Okay. He'll tell you that when there's not a war on, there's a lot of people just on different bases, and we're just hanging around eating and talking and trying to get into some kind of trouble, on the base. So if you could move some of those bases, and it wouldn't cost a lot of money, they can, be in tents or aluminum buildings. I mean, you're living in shacks anyway on the base, old barracks. Move that down to the border, then that gives us something to do in between wars. We're just hanging out on the border. So they would literally have to cross through our military base to get to the other side.
That's way too logical.
It's too easy because, there's times where there's thousands of people with their hands in our pockets just walking around the base. There's nothing to do.
Right.
Now we're walking around the border.
Understood. Yeah. It's, it's been a great conversation. I think that maybe we'll see if we can extend the session till 1 o'clock. Let me check the calendar here and see if we can keep going. But I agree. These are all difficult things, and there's hopefully going to be some good positive resolution to the issues that really matter. And that's really what counts, and that's what people are paid to do there in Washington, and hope they can get their act together. Everybody feels the same way.
Every resolution really starts, and if you listen to talk radio too much, as I do quite often, you can start getting this delusional picture that Obama is everybody's problem. He's the problem. The problem starts in your home. Get your home in order. Get your yard in order. Get your garage in order. Get your family in order. Then look at your city council. Get your police in order. Get your mayor in order. That's where it starts. And somehow everybody wants to push that. Everything's happening right down to in their bedroom on Obama. It's his fault, And it really starts with us.
That's a normal human tendency is people need somebody to blame.
Absolutely, and we do.
Yeah.
And all these motivational guys, really, it boils down to one thing. I've been to Tony Robbins and all these people. It boils down to just what I'm saying. Do it. No one's going to do it but you. You can blame it on somebody, but living well is the best revenge. So you can change it. You change. Don't wait for them to change. You can change it yourself. And it's a great thing they're doing with this TFNN, the gold thing and the referral system and all that. That's great. These are small things that help. It helps the overall picture in spending money in your town. Start worrying about Main Street on your town. When you see a pile of garbage there, say, hey, call the city and say, hey, how can we do something about that? There's people always throw garbage out at that corner. Let's put a garbage can there. Anything, the little tiny things. But everybody wants to blame it all on Obama. They don't have a job because of Obama. We just had some trees trimmed. It cost us $1,600. We had to call 3 different people before one even showed up. 3.
Yeah.
And this is the worst. There should be people out of work everywhere, but there wasn't. They didn't. The other 2 guys didn't even show up.
Yeah.
Didn't even call back.
Well, I don't. That's you should run for office. Have you thought about that?
I have thought of that, but I have 3 kids, and I'm trying to do everything I can. And there has to be people that aren't in office. You have
Sure.
to have people that will call the mayor, will do things, and take action as a citizen. Not like a preacher said one time. Everybody that I think is okay, I always try to get into the ministry. Then I started thinking, we need some Indians out here. Everybody can't be a preacher. We need some people to bring this into action. And the Occupy people, if you know, are being more embraced all the time because they're a little confused on some things and don't focus on particular issues. But the fact that a guy's out there with a sign, if you have a problem with your mayor and you're living in Clearwater, get out on a corner with a sign and say, Mayor such and such needs to be replaced because of this and that. Let yourself be heard, and then change will happen.
I agree. Well, listen, unfortunately, we're getting on the 12 o'clock hour, so I'm going to wrap up. But it was a pleasure. It was a pleasure going over all the stuff with you and talking. And I know we sidetracked a little bit, but it was a good conversation. So I appreciate you.
Back to the same thing. It's all basically the same thing. Have a good day. Bye-bye.
All right, great. Have a nice day. Take care and have a happy and healthy holiday. All right, I'm going to be signing off here. So I want to wish everybody thank you for joining. I know we had a little bit of a political discussion, and it kind of turned into something, but I think it was fun. Hopefully, you all enjoyed it, and we got a little bit of market commentary in there as well. So I want to wish everyone a happy and healthy holiday, and we'll see you next time.